Welcome back to the second session of ARR. Come, let us see the problem first. A company proposes to take up a project which requires an initial investment of rupees 40,000. Here, initial investment for a project is given, that is 40,000. The net income before tax and depreciation is given below. See, this is very important. You should know net income before tax and depreciation. I am underlining that. Why it is important? I will tell you. Okay. And 5 years information is given and net income for these 5 years is also given here. Tax rate at 50%. Calculate ARR. See, we need to calculate the ARR, that is accounting rate of return method. For the purpose of calculating ARR, we need net income or net profit after tax and depreciation. ನಮಗೆ ಏನು ಬೇಕು net income after tax and depreciation, but in the problem it is given net income before tax and depreciation, means they have not deducted the depreciation and the tax. Okay, now we will solve the problem. Calculation of ARR. The formula for calculating ARR is average earnings divided by average investment into 100. In the problem, average earnings and average investment information is not given directly. We have to calculate average earnings and as well as average investment. First, average earnings. What is the formula for average earnings? Total net profit after tax and depreciation divided by number of years. See, we required profit after tax and depreciation, but in the problem it is given before tax and depreciation. Okay, first, whatever that is given in the problem, that is net income before tax and depreciation is given in the problem. First, we will take that. Okay, for total we need. Okay, so calculation of total net income before tax and depreciation. Here first year 10,000 is there. I have taken plus second year 12,000 plus third year 14,000 plus fourth year 16,000 plus fifth year 20,000. The total is 72,000. This 72,000 is the total net income before tax and depreciation. Now, what is the net profit we required? Profit after tax and depreciation. Okay, now calculation of total net income after tax and depreciation. First information, what we are going to write is total net income before tax and depreciation that just now we have calculated. That is 72,000. We need to write it first. Next, first we should deduct depreciation, that is for 5 years depreciation we have to deduct, because here total net income before tax and depreciation is there for 5 years, that is 72,000 less total depreciation. Here depreciation amount is not given in the problem, but for the purpose of calculating the depreciation, the formula is initial investment divided by number of years. Initial investment is given, that is 40,000, and number of years is 5. 40,000 divided by 5 is 8,000. This 8,000 is per annum, per year, but we require this total depreciation for 5 years. For 1 year 8,000 means for 5 years how much? 8,000 into 5, it will come around 40,000. 8,000 into 5, 40,000. Next, After deducting depreciation from the net income before tax and depreciation, we will get net income after depreciation but before tax. That is 72,000 minus 42,000 is 32,000. From this, we should deduct tax. Tax rate is given 50%. Okay, 32,000 into 50% is 16,000. 32,000 minus 16,000 is the 16,000. This is total net income after tax and depreciation. Okay, with this information we can calculate the average earnings now. What is the formula for average earnings? Total net profit after tax and depreciation divided by number of years. Now, average earnings, that is net income after tax and depreciation, is 16,000. Number of years is 5. 16,000 divided by 5 is 3,200. Then we should calculate the average investment. So formula for this is initial investment minus scrap divided by 2. Initial investment that is given in the problem 40,000, but scrap is not given. So nil divided by 2. Average investment is rupees 20,000. Next, ARR is equal to average earnings divided by average investment into 100. Average earnings 3,200. Then average investment is 20,000. Okay, 3,200 divided by 20,000 into 100. So accounting rate of return is 16%. Thank you.